Today, I'm going to be going over the exact strategy that has kept me profitable for all of these years throughout every single market condition and cycle. And today, I'm going to do a step-by-step process on exactly how I start finding my key levels for my strategy till the execution part of it. When I enter, when I sell, and my stop loss, all of that good stuff is going to be on here. If you don't know who I am, I've been trading for almost 7 years now. I've made quite a bit of money, and I help others do the same with the exact strategy that I use every single morning. The way that I trade is super simple because I think the biggest problem is not only the strategy, but it's the discipline to execute the strategy effectively and efficiently and consistently over time. But in today's video, it's going to be all about the strategy and just my mindset going into the trades itself. So the first thing I do when I hop on the charts is I go over to the 1 hour time frame. Throughout my years, I have found that the 1 hour is the most efficient and effective time frame to use for our key levels. That will give us the most consistent breakouts with the best risk to reward. So for this example, I'm going to use NVIDIA. It's going to be a lot easier to show you guys the key levels that I'm talking about. Now, what makes a key level a key level? The first thing I'm looking for is reactions. In order to get these nice breakouts, you need to see previous price action also do the same thing. We want to see nice breakouts previously. Now, the first thing that I'm gravitating to is this $100 level. The reason being is because we had a nice reaction there. We had a nice reaction there. And then if we keep going with that same exact line, no candle bodies closed above it and then it came right back down. Every single time we reacted and had a nice breakdown. We reacted and had a nice breakout. And then we came down, retested it, nice breakdown. Reaction, once it broke out, nice breakout. So every time we're at this $100 level, previous price action has showed that it's been a super nice breakout and it has been clean reactions at that area. Now, I put more value in closer previous price action than further previous price action. So price action a year ago is less value to me than something that happened yesterday. But if all of those time frames look good, if last month that price action at 100 looked good and in today's market also look good at that 100 level, that will allow me to be more confident on this trade and make this that true A+ setup. So now let's plot out this $100 level. And one thing to note is I only look at key levels that are whole numbers. 100, 101, 102, 103. Zeros and fives have more weight, but that doesn't mean I won't take a 102 level or a 107 level. So now that we have this $100 level, we're going to go to the 1 minute time frame here. And this is something a lot of traders don't do is I also look at the 1 minute time frame because that's exactly how I trade. And if we don't look at that 1 minute time frame, instead of our win rate being 85%, it could drop down to 70%. It could drop down to 70% or even 60% with the same exact key levels because sometimes what the hour doesn't show is what price did at that exact level. As you guys saw in the 1 hour time frame, there's some wicks that get above it and there's some wicks that are below it depending on where price is at. In order to make sure that it was clean price action, we want to make sure we're going to the 1 minute time frame and also seeing how price reacted exactly at that level. Because if we're executing on this 1 minute time frame and previous price action at the 1 minute time frame was super choppy, you can't expect a different outcome with that same exact equation. So this just makes this extra confirmation. There's no reason not to do this. So we take a look on the 1 hour time frame and you guys can see we never even broke 100, which is great. Now, if previous price action, let's say, for example, previous price action was at this 102 level, I wouldn't like it. The reason being is because we had the reaction there. That's great. But then look how it broke. That just gave us a fake out, right? Came up, came back down. That looked good, right? Had that little retest, but that previous price action was a fake out. So there's a higher probability of it being a fake out if we break below that 102 because of that previous price action. So why would we not have the extra confirmation and make sure it looks really good? Now, if it broke, for example, if this was our key level, look how nice the breakout was, then that retest. Even better key level right here. For example, if this was the $100 level, it reacted there and then it broke down super nicely. That's fine. That's perfect. That's what I like to see on the 1 minute time frame. But we don't want to see something like this. We want to see it reacting and looking good. Now, the next thing, we have our key level. The next thing I'm looking at is that previous price action. I want to see an intraday reaction at that key level to make sure that price is still respecting it like a wall. Because if it's not, then you're not going to be able to get a nice breakout. The reason why we're getting in where we do and why we have crazy moves once we get in is because there's a wall sitting there. Think of it like a dam. Once that dam breaks, it's holding back all of that water, so it will flush in one direction. If there's no dam, we get no flush. So we want to make sure there's a reaction like that. Now, a perfect example of good previous price action is this 420 on Qs that we took the other day. This is an extreme example, but I'm trying to show you guys a point here. Now, we took this to the upside. It was one of our craziest trades that our traders had, including myself. This was an insane trade. We made 20 R on that trade. So if we risked $5, you made $100 with that reward, which is crazy. 1 to 20 risk to reward doesn't usually happen, but I want to go over that previous price action that allowed us to take this trade and was more confident in this trade. So the first thing is we had the key level at 420. That's good. We already have that. Now, the next thing we want to note is that previous price action. That's the next plan. We want to make sure previous price action looks aggressive, has some momentum, it's not extended, it's not slow, and it looks really good in our direction. When this downside happened, we had this nice little downside move. The problem is it was super slow. Now, that might not make sense if you're new, but you want to really understand every single candle and what it's doing and how it's reacting, right? You kind of get a feel for each candle. Now, that could also be in addition to watching the tape as well. You want to look at the time and sales, see how slow the momentum is, see how fast the momentum is. But this was a very slow move to the downside. We came up, came down, came up, came down, came up, right? It's just like it's so back and forth in that area. There's no real aggression. Next, we started bouncing, right? It was inevitable to bounce after this slow move. It's just about when. And we bounced pretty hard. As you guys have seen, this actually picked a direction. One little candle, huge move to the upside, one little red candle, all the way back up. Now, this is extended, right? I can't take 420 like that. The probability of profitability decreases the more that it's extended. I personally have a 5 candle rule. After 5 candles in a row in either direction, so 1, 2, 3, 4, 5, I usually won't take 420 unless I'm in the mindset that this is going to be a quicker scalp and it has to look really good. But usually after 5, I have to get a reaction. Now, thank goodness we did. We reacted right at around that 419, 420 area. And then we bounced, right? I kind of look at this stuff like legs, where we have this nice upside move, people taking profits, then we go up. The only way to take profits on longs is to sell, which is why this move was justified, right? That's why I like to look for the reactions. People that have no context get scared and get unconfident. I have the context. I know after a huge move like this, in order for people to take profits, we need to come down. So that's the context. That makes me more confident because I know that's how the market works. Then we come up, we're getting tighter. The bids are holding higher and higher on the level 2. They're starting to stack right here. They were stacking at that 415. Then we start stacking at this 416. Bids are holding. Every time the sellers came down, they weren't really strong on the time of sales. And then they literally hit a plateau where the buyers did not allow the sellers to keep going. And then we brought it right back up. We came up to right around this high of that 418, 419. Next thing you know, we launch. I get in as it's breaking. I'm pretty sure I even anticipated this once we broke that 419 because there was just so much momentum after this high. And the way that I was able to find that momentum was the time in sales. As you guys see the numbers on my chart, when you guys see my live trades, you guys see the numbers right here. I'm looking at the momentum. I'm looking at how the ask is reacting at that 420. I'm making sure the bids are continuing to increase. And I'm also making sure the speed is there in the buyers. So I want to make sure all of those are coming together in order to take that break. Now my stop loss, pretty simple, would have been the high of that. Because if it breaks above this dam, then if it comes back down, I know I'm wrong almost immediately. And my stop loss is going to be right here. It can hold up here, depending on what it's doing for the day. But 8 out of 10 times, this thing will just rip like that. Sometimes it will come back down and retest that area and then go. And we have to have a little bit of room just because It can go under that and then come right back above, but that's why our stop loss is right there. That was our stop loss, and I'm usually risking like 5 to 8% at most on these contracts. But the way we sell is by momentum slowdown. Again, something we look at on the time of sales is momentum and speed. Once we start to see that relative speed start to slow down, because it was fast, and it starts to slow down right around here. And you guys could tell by the candles itself. You guys could start to see the wicks right here. We came down, came right back up. That doesn't mean I'm fully out, but I'm going to start taking some off right here to decrease my risk and increase my reward. My stop loss is now, when I take the first trim, my stop loss is now break even. So now I am not risking anything anymore. My risk is not there. The rest of the contracts will hit break even. And then once we get into these whole numbers, for example, if I see the next resistance was 430 and we break 430, I'll start taking some more off right there. Now we're getting pretty extended. Again, this was a $10 move on QQQ that never happens. I still was sticking to that same plan with that momentum, slow down on the time of sales for me to exit. I sell here. I sell all at that 430 just because I want to sell into that momentum so I'm getting the best price. And I'm not trying to catch the whole move. I'm trying to make sure my risk to reward is super clean, and I'm aiming for that 1 to 3 risk to reward every single time. This, for instance, is not even in that book, right? This thing's a 1 to 20 risk to reward at this 430 area. So it's just a matter of when do I feel like selling, when momentum is starting to slow down. I don't care what it does after I sell. It's about me managing the position that I'm in, because we're not here to catch the entire move. We're here to catch a chunk of it and move on, making sure our risk to reward is great and our win rate also follows with that. But this is basically my strategy. It sounds super simple, but we also are making sure, that previous price action is looking good, time of sales is looking good, level 2 is looking good. Everything has to look good for us to take it. It seems simple, but the mindset to actually execute where we're supposed to execute and not execute and react by not reacting at certain areas is the main thing that is holding people back from becoming profitable. If you guys want to watch me trade every single day and get access to the lessons that I host every single week, we literally have daily lessons in my chat. My senior traders go over Q&As, they go over the risk management, they go over all the lessons, as well as myself dissecting every single trade that we've taken so far and student trades as well. The link is in the description below, and hope to see you guys in there. There's also a free side if you guys want to check it out before fully committing.